Let me just mute. Let's see if we're actually live. It says we're live. It's odd. Why is my camera? Let's see. Check. That's where my connection is unstable. Oh, there we go. I'm in. There we go. Let me see. Hey, everybody. Good. That was odd. There we go. Hello, everybody. Welcome to Finance Junkies. Sorry about the technical delays. We had an issue trying to get everybody in and getting cameras and stuff working. But here we go. I'll bring in everybody. There we go. So today's panel is a little weird, right? It's not what people expected. This is some of the people from the chat. We got TJ the Wheel Deal. We got Rango, a fan favorite, and Heinzie Ketchup. Heinzie Ketchup's first stream with us. You live in the same house that Steve lives in, apparently.
How do they do that? How do you?
I don't know. I don't know. I don't know how they do that. But here we go. Yeah, so this is the Sunday edition. Thanks, guys, for bearing with us or bearing with me the last couple of days. I don't know if you guys know, like, I didn't do a show on Friday. I'm trying to do the Sunday and the Friday thing, but I was actually out of town this weekend. How many of you guys saw the Joe Rogan comedy special on Netflix yesterday? Did you guys see it?
I was trying to watch it live.
Stop laughing.
So many of those clips that I was actually working that this weekend. That was me.
No, I'm still trying to catch up on.
Oh wow! Congrats, man. That's
I was working it. So we did 2 shows. There we are. Those were my crew passes. That was awesome. Got to hang out with him.
Wait, one second.
Awesome.
I can't see anything.
Ray, here we go.
That's Steve. Are you sharing something?
No, I was just holding up my passes. This is my pass.
Oh.
Like the crew.
Did you meet Joe? Did you meet Joe Rogan?
I did, actually. I did. I mean, I met him before. I've worked with him before on some stuff. But
nice.
It was funny because I went downstairs like right between one of the comedians when they were going off before he went on. And I just was like, I got to use the bathroom before this thing happens. And I'm running around trying to use the bathroom. All of them were being used. So I go to one of the security guards and I'm like, where's the nearest bathroom? She's like, right there. I turned the corner and there's Joe. And I was like, excuse me. Like went in the bathroom and like peed. And he's like sitting there just like bitching. And then I popped it. I was like, hey, all right, I'll see you later. But that was fun. A bit fuzzy. Everyone else looks smooth. Yeah, I don't know why I am looking fuzzy. Let me see. Back on my Wi-Fi and see.
Didn't Netflix shut the bed on the internet live stream? Because I was watching it and then the live stream just stopped working.
Well,
and
here,
I was like,
can you guys see me and hear me okay? We had a power outage while I was gone. You guys see okay? Yo, what's up, Alex? Yeah. What's up, Ray? Oh, Amit's still live. That's why there's nobody here. 68 people because everyone's watching Amit. That's fine. We just go. What's up, Ashfield? Okay, let's go. Markets are crashing. Yes, I know. I heard. Love it. This is Steve House. Evening all. What's up? Didn't even know he had a show. Yes, he did a live show yesterday on Netflix. That one clip is being played over and over about how his whole viewpoint changed after COVID. And that was good. People were talking about that. I just got back today. I literally just got back maybe an hour and a half ago. I wasn't even sure I was going to be able to make it. But fuck it, man. Yeah, we're here. Fuck it, man. Sam Bad. Thank you, man. Thank you, guys. So yeah, still getting this thing going. Still trying to get into the groove of this thing. So here we are on a Sunday. Appreciate you guys, the 68 people that are watching us right now. Heinzie Ketchup, Rango, and TJ for joining us today. Topics. We're gonna have to talk a little bit about markets crashing, but what I wanted to discuss for today's topics is the FOMC meeting, meaning rate cuts. It looks like we're gonna have. Looks like we are going to be getting rate cuts very soon. What do we think is being priced in now, or what do we think the impact's going to be? SunPower, a prominent solar company, they haven't filed for bankruptcy, but their freaking stock is like 90 cents right now. They were once $10 billion and they're going out of business. And then AI earnings fallout. And just to explain what that means is we'll talk a little bit about So Meta had their earnings this week, and Zuck was really honest with investors about how long it's going to take to actually monetize AI. He's like, it's going to be 5 years. Normally, stocks tank on that kind of news. But aside from them having that beat, it seems like the market respected the fact that they were like, look, you're being honest with us, and the stock actually went up. So the question is, does that provide cover to other companies that are also going to take time to monetize their AI? And also, how does that affect NVIDIA earnings to be coming up? So there we go. How are you guys doing? How was your Sunday today?
Pretty good, man. Pretty good. I was just working today, pretty much.
Yep, pretty much working too.
Yeah. Where do you work, Heinzie?
Well, I you know, just like what I said when I met you guys, you know, I'm in healthcare, and I also teach nursing on the side. So that's the one I was working on that right now.
Yeah. Okay. Rango, what were you doing on this Sunday?
I was just working, man. Tesla keeping me busy, pretty much.
You guys all gearing up for the October event? Are you part of that whole?
I mean, can't talk about it much, but
Right.
it's going to be pretty cool.
He's like, but I haven't shaved in three weeks. And you, TJ, where are you coming from, man? You were just
we have a couple of couples over, and we're doing a little. We're attempting to do a barbecue. I have this Rectech pellet grill that I inherited with the house.
Yeah.
And admit it was missing an igniter or something. We got that done, but shit turns on, but it ain't heating up. So we're gonna turn it into like a charcoal grill. And we're gonna cook some chicken on that thing, just like the portfolio got cooked last week. I want y'all to know that this game is relative, okay?
Yeah.
It's relative. So here's the thing. I want to be allowed to present real quickly because I want to show something.
Go for it.
And what I want to show y'all here, and before I show it, I want to say this to the audience. Stop fucking crying. We all know what we signed up for. We all know if stocks go up, down, sideways, it's not like you were probably planning on getting out of the market tomorrow anyway. Let's relax. Let's take a step back. Google, Amazon, Meta, etc. They're not going out of business in our lifetimes, more than likely. So relax. It's going to be okay. Because this is what I'm dealing with. Okay. So this is where I'm at, and I have it on the weekly.
I think it's more about what causes it. I think people understand that there's going to be downsides, but I think it's more about what causes it that people react to versus the actual 10% downturn. Like a 10% downturn is normal. It's actually kind of healthy, right? If you missed out on buying something, it's a chance. So, all right, let's see what you're showing it. Yeah. When you think you're down, just look at how much TJ is down. Whatever you're down, multiply 1,000.
So I want each and every one of you guys to shut the fuck up. Life's tough. Wear a helmet. Relax.
What does that say? How much are you down in the past week? How many fucking zeros is that?
Is that Dogecoin or no?
No, he's
just chill out already. Just chill out already.
Yeah, that definitely puts it into perspective. I'm pissed off because I actually bought some Ethereum. Like I had sold some when Bitcoin dominated starting the top, and then I'm like, oh, this is a good price to buy back in. The next fucking day. I don't feel so.
It's at 2,300 right now. Can you believe it?
Oh, I should have waited. And that was why I sold it. I sold it to buy some back in. So I'm like, all right, I still got some powder on the side. I'm not gonna complain. Damn, how do you have a barbecue on a day where you're down almost more than $750,000? Why do you
I'm down, but I'm not out, baby.
So here's
the thing. There's nothing in the portfolio that I was actually trying to sell. So if you're in the business of buying stocks and holding them for the long term, yes, I sell puts and calls against them. It's an opportunity to really test your conviction, test your investment thesis, make sure that it's intact. Like, guys, these are really, really good opportunities to do a checkup from the neck up. It's a real good opportunity to take inventory of how do I really feel about this position? Because there's a situation where I have another company that I have a lot more conviction in. Is there an opportunity to lock in a tax harvest this early in the year and move the money over? Then this is probably going to be a good time to do those types of things, because you don't want to be in shit that you don't really want to be in these situations. You're gonna be really hating life.
But
So you want to have super high conviction stuff in your portfolio.
Do you react to this? Like tomorrow morning, do you react to this? Say, okay,
the only thing I've been doing all weekend, honestly, guys, is trying to figure out what can we do? What can my wife and I do resource wise to free up another $1 million if shit gets really, really bad? Because the only thing that'll piss me off is if I wasn't adequately capitalized from a bankroll management perspective.
How much are you in cash right now?
Yeah, so I can look back if I go back over here. I think I stopped sharing. Give me a second.
I'm also gonna put the link in the chat if anybody wants to join our
Yeah, if you put it up there real quickly, I'll go to the buying power, and the buying power gives you this whole setup, right? So I've got 2.4 in cash, but the margin's 2.6, but I'm already very levered in puts. So before I can really do anything, I have to see where do I really stand with these cash secured puts, because if shit hits the fan, I know that I don't want to own more than another 2.4, because then I'm legitimately going into margin at that point. So that's the issue. So I just perused a portfolio. I'm like, Palantir, who gives a shit? Amazon, who gives a shit? Celsius is one I'm monitoring, but it's not a huge position. Hood, who gives a shit? And that's what I start doing. And then I already see the pain point. I've got 25 puts on Intel at 29, 31, and 32. Can't do shit there. Have to take ownership. So I look at it roughly. Looks about 260, 270,000. So that's not really going to cut into much. It's like 11, 12% of the cash. And then I just start looking over here, and I don't really see anything that's freaking me out. The NVIDIA at 118. So I start looking, and that's when I'm like, okay, breathe. Shit doesn't really look that bad. What happened is you fucking own a lot of shares, and when you own 150,000, shit goes up or down $1. It's 150 grand. Just to start giving me a little perspective. And I'm like, I don't really see anything here aside from Intel that I really got caught with my hand in a cookie jar in a really big way.
They stopped their dividend.
Which sucks. But the cool thing is I barely started this position, and I'm sitting on 10,000 shares currently at $27.55. If I take ownership of the other 7,500 shares via these puts, it's probably going to bump the average up to like maybe 28 or 29, and it's sitting at 20.53. I'll just sell a few rounds of aggressive covered calls, and once money starts coming through the door, I'll start feeling good about it. So you got to look at each position and figure out how you're going to navigate it. And it's kind of like a football game, man. This is the possession that I'm in. You can't win or lose the game on one drive, usually unless it's like the last 2 minutes of the game, but it's just, you got to just keep everything in perspective and don't overreact to everything. But I'm keeping my eye on some stuff, dude. If shit goes really, really south, there's some positions that I feel light in, and I want to just rebalance the portfolio, if that makes sense. So that not necessarily to take the beta out of the portfolio, but just to increase my confidence in it, if that makes sense.
Yeah.
So anyway, hopefully it helps you guys navigate, man. Because what do you do, Carlos, when you're dealing with such a massive drawdown in your portfolio? Because I know you're invested heavily in Bitcoin. So what do you do when you look up and you see Bitcoin and the sky's falling and it's at 54,500 right now?
I've been doing daily buys. I mean, I'm literally just buying daily to just smooth out some of the noise. I pulled some profit actually way back when we had run up a bunch. I'm really trying to follow what the data says. I'm really trying to follow the Bitcoin dominance and being respectful of it, even if it goes against what I would normally do, right? So as Bitcoin dominance was getting up, I scaled back on purchasing, and I actually started to sell some Ethereum to leave some of this dry powder. And I've been slowly deploying it. But I thought I got a good price at like 27 or 2,800 because I sold it a bunch higher. And now we're at 23. So now I think I'm just gonna, now I'm in a wait and see right now. I've got plenty of crypto, so it's not like I need to deploy it.
Right.
What I might actually start doing, depending on how the markets are tomorrow, is actually maybe pull some of that money out of Coinbase and deploy it into the stock market. Because that actually leads me to the first topic of today, was the FOMC meeting, right? It looks like we are going to get it looks like we're going to get a cut in September. But I'm also
Right.
hearing stuff about maybe there's going to be an emergency rate cut in August. I don't know if you guys had heard anything about that. I got an article here that we can.
Yeah.
Look
And you know, just to add on, guys, with the stream and you know talking about Bitcoin, you know, after the halving, there's usually like 18 drawdowns.
Right.
You know, it usually consolidates that way, and there, every time that there's a drawdown, what my strategy has been is every time that there's a big drop, that's when I buy. Like right now, when somebody mentioned 52,000, okay, I'm gonna go on my you know Coinbase and buy a little bit here and there.
Pick up
right?
some. You know what
Yeah.
though? But I've been really thinking about this, and this is actually good to talk to somebody here. Are you in crypto at all, Rango? Yeah, you're in Rango. You're in.
Yeah. I
So-
mean, I have a lot of Bitcoin, Ethereum, and Solana.
I am.
Yeah.
I'm sorry. I just Kevin.
That's crazy.
Bitcoin, I would say. Jesus Christ, really? That's it? Is that all? Is that all it's worth?
No, but I'm waiting for the LOL or the like. I'm a little
Like,
confused.
no reaction, like
Wait,
none.
where
Oh,
is that the whole thing?
That's it. That's all you.
Real quickly for me, because I'm not familiar with Rango. Is like I don't know what your handle is. Maybe I've seen you on the chat or
Right.
whatever. Can you give me a little 30, 45 second elevator pitch? Like 'cause I met Heinz. I had the pleasure of meeting Heinz.
At the Junkie Con thing. I reached out to Rango. I don't know when it was, over a year ago. He posted something when you were moving from Apple to Tesla, I think it was. And I just started reading some of his posts. I really liked like the quality of the post and the point of view. And I asked him to come on one of the episodes, and we just sort of kept in touch since then. And he helped us when we did a couple of debates on, you know, Meta versus Apple. So
Yeah.
he's been a friend of the show, I would say. So he is also invested in crypto. Right now, you work for Tesla as part of the supercharging team, right? So his insight's pretty valuable, and he was also part of the team that helped develop the M1 Ultra. Like, you know, correct me if I'm wrong, but I think that's
M1. I was working on the M1 chips.
You're welcome. I'm trying to keep going.
The Vision Pro, like the real time processing for Vision Pro, and I write some firmware software for these stuff basically. Yeah.
So just to pivot back, and so this is a question for you guys. Are you in crypto at all, TJ? Besides the miners?
Yeah, only the miners, because I can't afford to be in anything if I can't sell calls against it. That's just my thing. Like if it is not a dividend paying stock,
right,
I'm not going to buy, hold, and hope.
Right.
And that's just as much as upside as I believe in Bitcoin. My whole strategy is predicated upon collecting premiums, because that is what I can accurately quantify and calculate on an annual basis. So with the amount of money that I have in the portfolio, I'm like, I know I can bring in $1.5 million this year in premiums, and the stocks are going to do what they're going to do. You know what I mean? And I can't do that I can't tie up money in Bitcoin knowing that I'm going to lose, you know, a lot of my firepower, if you will, just waiting and trying to study and make sense of a fucking rainbow chart. So I'm just saying it's hard for me. It's hard for me.
Rainbow chart. Well, I don't know. I go back and forth, and I'm not sure that we're going to see, like you said, right? Oh, this is what happens after every halving week, because I have 12 to 18 months of some choppy price action. We might see a local high, and then people sell. And basically after crypto, Bitcoin wrecks everybody, wrecks the shorts, wrecks the longs, then it takes off. I just don't know anymore if that's going to happen, man. Because we've at this market cap level, it's all institutional money. They think in 3 months, 4 months. And to TJ's point, look, they're making a shit ton of money on fees on the ETFs. Do they give a shit about the price? You know, like we were waiting for them to come in so that they could basically shower our portfolios with money. And yes, there's a bunch of money still on the side, but I mean, I don't know if we're going to still have that same big blow off peak at the end of 2025, like everybody thinks, right? We thought we were going to get that at the end of a couple years back for the last halving, and it didn't happen. It didn't happen.
So then, Carlos, how do the miners stay in business then?
Well, the miners are the buying and selling. It doesn't matter whether they're buying or selling. The miners are making money. I mean, they're still mining the Bitcoin that's out there. They're still going to be making their money.
But I mean, the reward got cut in half. If Bitcoin doesn't rise, that's the commodity that they're mining. The cost of the Bitcoin is what to mine. It is what it is. Like I think Bitcoin has to rise in order for it to be a profitable business venture eventually for the miners.
Yes.
And going back to the miners, it really just depends on which mining company can do it at the most efficient with the least amount of energy. That's really the question there. And that's why I was, when we met in Vegas, I was talking about CleanSpark when it was like
They're very
$2-3.
efficient.
$2
They're very efficient. Yeah.
I was talking about it when they were $2 to $3. So, you
buy
need
calls?
these
Yeah.
miners, right?
What
You got
were
to
you
pick your
buying?
winners.
What were you buying CleanSpark?
I mean, you're buying CleanSpark at $1, $2.
So at
Pretty cool.
$2, were you loading the boat on shares or were you buying calls too? Because your calls will be printed right now.
Are you asking me, Carlos?
Yeah.
No, I don't know much about calls. That's why I've actually just started watching TJ's,
Yes, watch.
streams about calls, but I was just mainly on shares. So
Right. So you got a good bag. You've got to be happy right now.
oh, I did. I had to, of course, there's nothing wrong with tabling some profits, right? Because you want to deploy that, move it somewhere else.
Mm.
So I actually sold a little bit too early, but it was only half a position.
Right. Ranko's bricks don't have rank.
I mean, these are not real. This is a background. I'm not gonna lie to you. Like,
No, guys, they're not real bricks. So typically what happens is, and this is just going back a couple of cycles, when they're a month before the rate cut actually happens is when Bitcoin starts its run. So right now, if we're expecting a run or expecting a rate cut in September, we should be either running or on the verge of a run. And it's the exact opposite right now. There's a lot of things that are like counter indicators here.
And I don't.
I mean, it's just risk off right now because I mean, after the jobs, we can talk about that after the jobs report.
We should.
I think it's just market increasing probability of a recession pretty badly, right? I mean, I've been seeing indications of that already, like for a while, but it's nothing new. It's not like something fell off the cliff or anything. It's economy is weakening, and that's consensus, and that's why we're going to have rate cuts, right? But like I think it's kind of an overreaction of what's happening right now. I think it's also to do with liquidity because Japan is having trouble, and there is that Japanese carry trade, which is kind of dead right now. All that is also like factoring into the and Buffett selling and going record cash and all that is like it's all feeding into the fear, but it's still I think a pretty big overreaction. There's nothing new which came on Friday, in my opinion.
Yeah, I think something came out that that Warren Buffett owns more T-bills than the government. I think that came out.
Yeah.
So
He was supposed
he's
to be like
really
failing.
his dry powder's ready to load up.
That he's supposed to. He's
I mean, yeah, we got to understand that Warren Buffett actually missed the COVID bottom. Like he completely missed the COVID rally. So it's not like he's perfect. At the same time, I wouldn't write it off.
This is a good point here. I'm seeing evidence of this that the Fed waited too long. That a 0.25 cut will be seen. It's too little, too late. And that
is true. That is true. Yeah,
I concur.
We should bring this up because this is something I'm actually just even learning about myself. So can you see this? Yeah, the Sahm Rule. I've been seeing a bunch of videos about the Sahm Rule.
Yep.
And this is the first I'm really hearing about this. So I just wanted to take a second and read this. This is a little bit of an article that I was looking at. So they were saying, right, we're at 4.3% on unemployment. And I think 4% was the trigger point, right? If we go up above 4, then that would be an automatic trigger.
It's 4.5, Carlos, I think. It's
4.5. That's what he was saying. It was the trigger point? No, it's 4.3 now, but from what I remember, it was.
Yeah. Oh, the trigger point. Yeah, it's 1% increase in I think 6 months. Which
it's
is
within the 3 months. I think it's like
4.6.
That's the Sahm Rule.
It's the 3-month moving average, and unemployment rises 0.5%. So when the job reports came out, that's when it triggered the fear.
Right.
Yeah.
So we're now here, right? And so just to read this, the Sahm Rule gets triggered. Developed by former Federal Reserve economist Claudia Sahm, the Sahm Rule in the past has shown a recession is already underway when the 3-month moving average of the national unemployment rate rises 0.5 percentage points above its low from the previous 12 months. That level was breached when July's unemployment rate rose to 4.3%, though Sahm herself has questioned whether the Rule should apply in current circumstance because of labor market distortions caused by COVID-19. I mean, whatever.
The
Whatever.
problem with
Say
I
that-
think the problem with this, the problem with the Sahm rule is that I think this is not been like a pre-existing rule from 2000s. I think this was they came up with this in 2019 or 2018. Correct me if I'm wrong. And they looked backward and kind of generically drew a line, and then like just said, oh, if it crosses that, it's a big deal. So it's not anything which is pre-existing that got triggered. It's just they came up with this mathematical model looking back, which is just back tested. It's not like proven to be true looking forward,
But if people think
so
it's true,
that's like that's a counter argument to it. I'm not saying it's not true or false. It's that's kind of like a counter argument. Anybody can make graphs looking backward, right? Like,
yeah, but the point is that people think it's true, and they do think that it is a forward indicator, and they react to it. It's sort of a self-fulfilling prophecy, no?
Oh yeah, for sure. And this is why like if this had happened, I mean, at the end of the day, yeah, sure, like all this is a big problem, but credit quality is still pretty good. We just heard from MasterCard, we heard from SoFi, we heard from all these banks. Literally, we just had all the earnings, right? It's like credit quality is still pretty good. Guidance has not come down. Earnings guidance has not come down. At the end of the day, if earnings is good, I think the rally will be back on track. And at the end of it, it's all about earnings. So there could be a self-fulfilling prophecy where your market keeps going down, and that causes the recession as like a self-fulfilling prophecy. I think like market stability is one of the mandates of the Fed, so I don't think they will let that happen overall.
Mm-hmm. Hold on,
And I think we won't know more until we see the next job report, because this is just more of if they see a consistent pattern going on. Now, there's an argument to be made that like I think we just had a hurricane or something, and there was a few people that there was a I don't know the exact number, but people filed for unemployment, right? So that would affect that. So I think we won't know until the next job report to see how consistent the pattern will be. So that's just my opinion.
The other thing with the jobs report, and I was actually looking to see, maybe you guys know, is there any way to know that how many of the jobs that are created were actually created by the government versus
There's a lot? Most of them are the government.
Most of them are from the government and healthcare.
So is that real?
Yeah. No, and the last 1 year that's been the case. It's not just like the recent jobs report. The last, I think, 6 to 8 months, or even the last year or so, the most of the jobs is not in the private sector; it's in the government. So economy is definitely weakening. That's not up for debate.
And just to put in perspective, these job report or these government jobs, they're not just full-time jobs. They could be per diem jobs. They could be part-time jobs.
Really?
Yeah. And also like this is not, in my opinion, this is not a coincidence that they came up with a stricter border resolution just before the election a couple of months back. They came up with a stricter border.
Stricter what?
Border regulation. Like Biden came up with the executive order to shut down the border, right? Just a couple of months back. And I don't think it's a coincidence that your hiring just fell down the cliff as soon as that happened, because like you just don't have enough people to work for the pressurized wages. So like the hiring automatically just went down. Like so I don't think that's a coincidence. Like this was like he was propping up the economy by having loose immigration policies, which was like taking care of the tighter labor market, making the labor market a little looser. And that became an election issue, right? And that's caused to a point where it's not sustainable anymore. And let's see what happens. Yeah, I mean, economy is weak. That's not up for a debate. But a good thing is it's not weak when our interest rates were at 2 or 3%. It's weak when it's 5.5%. So we have a long way down to go. So if you do like 200 or 300 basis points cut, and we should have some kind of like uptrend again,
Well, speaking of that, I want to see if I can get this chart to show me correctly.
Hey Carlos, real quickly, dude, we have 3 couples over. and
Yep.
my wife wants me to go entertain a little bit outside. But I just want to tell you guys, man, you always want to take a step back and always, like, when in doubt, zoom out. Like if you're
Mhm.
studying a company, it helps when you do that with the charts, but it also helps when you do that with your time horizon. Like, I don't know how many drawdowns I've been through in my career. And aside from like 2008 and a little bit in 2000, and COVID was so, like, such a, like a flash crash,
Yeah,
really. It
yeah.
was so, like, I can't even, COVID, I don't even count it, because that was something that none of us had ever lived through.
Were you wheeling back then?
No, I've been in the market since 1997, 1998. But I didn't start wheeling until during COVID, because I wanted to figure out a strategy that I could do full time for the rest of my life, because I was done with oil field blue collar work. But what I want to convey, guys, the message that I want to leave you guys with is, 5 years from now, none of this shit is going to matter unless you don't position yourself accordingly. So you always want to maintain that long-term horizon, so that you don't get too high or too low. Too high when things are going really great, or too low when things aren't going so great. And you want to stay even keel with your temperament, because I think that's the hardest thing to teach and learn in the stock market and investing, is be level-headed at all times, because corrections don't last that long typically, unless you make really, really bad mistakes, man. It's like a life. It's really, really long where you make a bunch of shitty mistakes along the way. But a life well lived goes by in the blink of an eye. So just keep that in mind, man. Maintain a long-term horizon. Why did you buy these companies to begin with? Why do you want to continue to remain in them? And always be looking 3 to 5, 10 years ahead. And is it really going to matter? No. And then don't stress out about too much of today. Like,
Yeah, and
worry is payment in advance for borrowed trouble. That's your quote of the day. I
Say
got
that
to
again?
roll, man.
and I think
Worry,
and I think
worry
being
is payment in advance for borrowed troubles.
Yeah.
Fuck those troubles. They belong to someone else, not you.
and just to piggyback on what TJ is saying is, I mean, for me, being in the market, I think the most exciting times are when it's red. I think it gets kind of boring when everything is just green, because you don't really do anything. You just look at
Right,
charts and, like, okay, my portfolio is green. Now what? Right? So I think that's a pretty good perspective. Now it really just depends on your outlook too, right?
right.
So, for me, what I've been doing the past year is, keep that level head, and, putting part of my portfolio into cash, just for a little bit, having dry powder, and then just watch what the trends say.
Mhm. Well,
Agreed.
we could dive into that
Yeah,
deeper. But
yeah,
it seems
yeah.
like you gotta go.
I got to run, Carlos. Appreciate you, brother. Much love. Have a good
Appreciate you,
one.
man. Always appreciate that.
Isaac, we'll catch up again. Nice to meet you, Rango. Appreciate you, my man.
Nice to meet you, man.
Take care.
Oh, I'll put the link in the chat if anybody wants to pop on. Keeping it a little casual today, so we should just move on to the next topic, since this is related to interest rates. Oh, thank you, Digital Blade California. Got some. There's a couple new members today. Speaking of which, yes, Shane is hitting me up on the side. TJ is the other one. Yes, AutoStar Super. Yes, if you guys like the content, what did he say? He's telling me. Yes, we are now at 214 people watching on a Sunday. Thank you guys so much. If you guys like the content, please hit like, hit subscribe. If you hit like and subscribe now. If you don't like it by the end of the thing, you could just get rid of it. And also, I should do this. I need to be better about this. Hold on. I need to just take a second. And yes, can you guys see this? Yes, subscribe to the YouTube channel if you haven't. Can you guys see this? Yes. Oh no, I gotta share every single fucking tab. And if you guys haven't, where is it? Please. Oh yeah, that's the Patreon. That's the wrong page. But yes, I do have a Patreon for this. If you guys want to join, I'm surprised that actually the dealer tier is the one that is the most popular. I did not expect that. I thought I was going to get a bunch of crackheads for $10 a month, but the people just want to be on the inside and say there's a crackhead addict and a dealer. I'm trying to share the Twitter. Where is it? Yeah, here we go. And yes, and follow the Finance Junkies on Twitter. All right, so let me see. Oh, he's giving me the eyeball. Yeah, TJ had to go. It happens. It happens. Always appreciate TJ coming on. No, I say I blame the rates being lowered so long. Yeah, I don't think we need any more stimulus. I honestly don't think we need any more. That's just going to exacerbate the problem. Yeah, to get some fun on that. Yes, we are. Oh, and Novix, are you at all involved?
Oh yeah, I mean, I just hold shares. I mean, I trade in and out, but overall, I just own shares when it's low and sell when it's high, pretty much. But I keep building position long term overall. But I don't like go all in or anything. I
Oh,
just have
dude,
a
thank you so much.
percentage allocations.
Yeah, I actually just passed by Innovix this past
It's in
week.
Fremont, right?
Yeah, it's in
Is that
Fremont.
okay?
Yep.
Oh, you
Yeah.
there?
All of you know what's crazy is, and I'm sure Rango shares the sentiment, is the companies that you guys talk about, it's pretty much in our neighbor.
They're all there. Yeah.
Yeah.
Pretty much in the Bay Area. Yeah.
Do you run into those guys
Yeah, ENPH,
drinking on
Tesla, and
Saturday night?
yeah, Tesla, ENPH, NOVX, everything is here.
Yo, invite me down there one time. I'll come down there and hang out. We'll go and
Bro,
hang out.
come down, dude. And you know, what's his name? Zoe's here too. Zoe's in the neighborhood too.
All right. One weekend I got to get out. It's like my backyard. But I did want to talk. I think it was you and I were talking about a bit about this, Heinze. I'm going to pull up that tab about this is all the Fed stuff. Let me get rid of this. Let me pull up. I had some tabs pulled up for. Still trying to get StreamYard to. I guess it doesn't see stuff if it's not in the same space. Let me see. Yeah. So I wanted to talk a little bit about. Let me see. What's this? Yeah. Do you guys see this? There we go. Is that too big?
Bay Area tech companies at 290.
Yeah, this is
Yeah,
Sunrun.
is that SunPower? SunPower?
Or SunPower. Yeah, SunPower.
Yeah.
SunPower? Yeah.
I'm gonna read a little bit about this. Like, okay, guys that follow us for a long time know that we're in end phase, and some of the guys are in Solar Edge. I'm not particularly in Solar Edge, but they're good to keep track of. And this was some news here. Richmond Sun, is that big enough? Can you guys see it? Richmond SunPower Corporation, a decades-old solar power company now on the brink of bankruptcy, has announced plans to lay off as many as 290 California workers. The company disclosed the cuts on a warrant filing on the July 26th. The filing said SunPower is aiming to avoid some of the cuts, but there's no guarantee that it will save jobs. Where are we? The company's stock price has fluctuated dramatically, peaking during the solar frenzy of late 2007. SunPower hasn't filed its earnings report since December, when it said in a filing that it was operating at a loss in the prior quarter. In the filing, the company wrote that substantial doubt existed about its ability to continue due to its pileup of debt. In April, SunPower CEO Tom Werner announced a 1,000-worker layoff at the end of SunPower's direct sales program. Where's the part here that I wanted to see? Maybe it's not this one. Do you guys see this one? Let me see. So they were downgraded, right? This is from CNBC.
It's like $1.
Yeah, but there was a spot. There was a spot here. Where is it? Where they could SunPower stock collapsed 70% this week after they informed dealers they no longer support new leases, installation, or product shipments. But where is the part that I was looking for? Wind down process. Yeah, here it is. SunPower is likely entering a wind down process that will end in the sale of its remaining assets and the delisting of its stock. The Guggenheim analyst said JP Morgan sees the decision as an indefinite suspension of SunPower's future dealings. The decision to effectively suspend operations is the result of SunPower's weakening cash flow and balance sheet, as well as its inability to tap capital markets because the company is not current with the SEC, JP Morgan. So, what was your initial reaction to that? Say, we'll start with Rango.
Solar is a heavily cyclical, highly boom and bust cycle industry, right? I mean, so that's why you got to be extremely careful and have a high bar for picking a solar stock. And it's very hard to time the cycles too. So it's because it's basically follows the rate cycles. So SunPower in general had, I think, a ton of debt, and they are mostly an installer and some panel maker. They have high fixed costs. Not really surprising. They don't have any stellar management or anything. They don't have a moat. So it was not surprising. This is the time where all bad solar companies just go bankrupt, and the next upcycle is when like all the strong companies get even stronger. And that's when like capital management and operating management like needs to be looked at while picking solar companies. That's why I did not pick SolarEdge in the first place. And as soon as I saw falling gross margins and just not know enough capital discipline, like I bought for like I think 30 days and then sold it pretty much immediately in tax loss harvested it.
You're saying SolarEdge?
Yeah, SolarEdge is the same category. I wouldn't be surprised if they have operating problems either. They are basically operating at negative gross margin right now for their products. So it's incredible how strong ENPH is if you look at it, and that kind of tells you how strong the product is. They have zero down, and they took some revenue hits. They had inventory issues like every other solar company, but their margins didn't fall. They did not go through any stuff. They're making 400 odd million in like revenue, and they're buying back shares right now. I think that the next upcycle ENPH will like overcorrect to the upside, just like how it happens literally every cycle. So that's my overall thoughts about the solar industry, especially residential solar markets. So yeah, First Solar and ENPH is going to do well in the next upcycle, in my opinion. Yeah.
Well, but keep in mind too that they're fundamentally different. Like ENPH is a supplier for these companies, and they're not necessarily doing the installation. So that's one of the benefits of investing a bit further upstream, because there'll be a delay, right? There's a delay before it would hit something like an ENPH.
No, I mean it's already taken down like so many people, right? Like ENPH is not seen. I mean, they have seen declining revenues. That's not the question here. That's not out of question here. But the quality of the revenues have actually gone up and not gone down, in spite of so many solar companies going bankrupt. And like as much as you can say, like anybody can come in and design a high power chip like ENPH does, it's just so interesting that they've not only sustained a business and they're going to grow next quarter and they're going to keep growing this year. That's interesting. And just imagine what will happen if there is rate cuts.
Yeah,
and this was reiterated, a few months ago with you guys talking about this, that solar companies don't do well in a high interest environment, right? I mean, especially here in the Bay, because it's a Bay Area company, pretty much. And pretty much their bread and butter is the PPA, the purchase power agreements, new home builds, right? Well, if there's a high interest rate, and there's not going to be a lot of homes being built, then that's pretty much your business, right? So a slowdown was already expected. I think this was even before they declared bankruptcy. That maybe a month ago. Correct me if I'm wrong, but they SunPower ended their PPAs and discontinued lease, right? Which is pretty much their business. So if there's no lease or PPAs, then you don't have a business. So I think this was already foreseen, and it's sad that, it was pretty much bad timing with, I guess with these interest rates staying for longer. I think now we're going to see how this is going to trickle down to companies that are very sensitive to these high rate environments. I mean, we can all agree now that solar companies don't do very well on this. So that's why I'm not really vested in solar companies or solar installment companies.
Oh yeah. I mean that you gotta. It's definitely a high risk bet, and you gotta know what you're picking, and you gotta pick the right cycle. If you pick the top, you're screwed. And also, like I think the Fed just kept the rates high for too long. You'll see a lot of more bankruptcies, and that would entail, not because inflation comes back or not, it just entails that when there are rate cuts, your spending is not going to come back really soon, because there's just no companies which is operating, which is going to enable that spending. Like if there are no enough installers installing solar, even when rates go down, it doesn't matter, because it's not enough installers. There's no competition, which keeps the prices go down, right? So it's just they completely wrecked any interest rate sensitive markets completely, and I think they are a little too late to cut rates, and they should have definitely cut rates in July, but now September seems a little too late. Hopefully they cut fast enough so that you can kind of like the hope is that all these rate sensitive sectors like housing, solar, and like autos and all that stuff, the spending in these will make up for the weakness in the other sectors, like like just generally food and all those sectors, right? Like that way you kind of get that soft landing. That's the only way you can get a soft landing, because you need spending from some other sectors to come up for you to have soft landing. Hopefully not enough companies go bankrupt to kind of not to kind of enable this spending coming into the economy. Now you have only one sector of the economy spending right now, because wherever the high rates which is being affected, that whole sector is pretty much down. So
But just
it's
look
going
at
to
the
take some
difference.
time.
Just look at the difference. I mean, this is SolarEdge stock versus ENPH stock. ENPH stock has been beaten
Yeah,
it's been beaten up, okay? But if you just look at where we've come from, if you were buying in 2019, 2020, you're still up.
it's still
You're
4x,
still up.
right?
You're in, but this is where you are in SolarEdge. I mean, let's just take here. Let's just look at like an arbitrary bottom point. You're down. If you were buying in like January
Because
2020, you're down. And
it's because they're buying back shares and they're doing all the right things for operating the company, and they're keeping lean operations, and they've not overspent on fixed cost, and the discipline with which they've operated is just incredible, like in this tough environment. So and literally every guidance, they've either come above it or they've come like on the guidance, and they've told what and they've done what they've told they're going to do. So that's why I have very strong confidence in Badri and the management team. They've done really well, and they're expanding and taking market share in Europe, and they're expanding to other countries, and they're expanding into commercial. They're expanding into different sectors to expand TAM, and that increases like when the market does come back, you'll see earnings and revenue upside
some lower
surprises.
costs, move higher units. But also, I just want to answer that. ENPH might end up with more market share as more of these ones go out of business. Yes and no. I mean, the solar installers going out of business is not good for ENPH. It's not like they're taking market share from the installers,
No, they're not. But the thing is, that's a viable business where it's not like a high barrier to entry business. That's what it is. Like it's one of those businesses where the people who have operated correctly, the solar people, they'll get more business going forward, and they'll become bigger. And NFAS kind of supports them. It's not like really a business where it's a small business, right? It's not a business where there is like really hard entry conditions for you to enter. You just need capital to enter. So
can you provide a link to this? Detroit saying that ENPH also installs. No, they train installers. There are ENPH like certified installers, but as far as I know,
they train installers. No, they have training, installers training. They don't have installers for themselves. And that's proved to be a successful business model, and the whole industry is following that business model now, just because of how cyclical it is.
Yeah. So it'll be interesting to see what happens if and when these rate cuts come. I almost feel like the opposite's going to happen. Where people have been saying, "Oh, rate cuts. We really need rate cuts," and then rate cuts could happen, and it might not actually have any effect whatsoever. Because, like you said,
it won't have immediate. Yeah, it won't have immediate effect. It will have eventual effect, but it won't have immediate effect.
If they would have cut rates in June, I could see when it's summer months for most of the country, then you could say, okay, maybe people will pull the trigger. Kids are away from school. Well, actually, no. When they're away from summer isn't necessarily good. A lot of people go on vacation. They don't want to do an install like that. But you would figure during the summer months, that's when you really get the demand for solar. If we start getting rate cuts in August, if we get the emergency cut in August or a cut in September, I don't know that it's necessarily going to push people to run out and go get solar right away. Eventually it'll help maybe for next year.
No, so I think the argument there is that it won't immediately help, but they just need incremental demand above their guidance, because they've already guided, like you're already well into the quarter to give the guidance, right? And they're already guiding for growth. They're already growing to 400 million or something like that. So they're already guiding for growth next quarter. And what rate cuts, especially emergency rate cuts, if there is an emergency rate cuts, it's not going to be 25 basis. It's not going to be 25 basis points. It's going to be 50 or 100. And I don't think there is going to be one. But if there is one, it's definitely not going to be 25. It's going to be 50 or 100 basis points. And that is definitely going to help because, and in terms of demand, especially in the commercial side where there's CapEx related, and commercial is a new business for ENPH. So yeah, like especially CapEx sensitive investments where they can borrow low and instead of spending cash on their balance sheet. I think that will definitely help there, especially all these hyperscalers building out the AI compute. I think there is demand which is kind of pent up right there, and it'll rate cuts will help in the commercial sector for sure.
The commercial is what I'd be most excited to see them starting to expand. They don't.
Yeah, they already started to expand. IQ8, PE, and all that stuff is commercial, and they've started to expand, and they're getting good traction too. I would say, yeah.
And guys, just remember when, especially I can speak in California, right? Is anytime that they build a new home now, it's gonna have to have solar, right? And
Yep.
when I was doing my, I was looking for homes in the East Bay, and I was looking at a specific home, like a new build, right? Lennar. I don't know if you guys have heard of Lennar,
Yeah, the
but
unions. Sorry, Navarre Lennar, right? Yeah.
Exactly. And they would have a specific installer, but they would use Enphase materials. So to me, that was like in the beginning of my research, like, oh wow, like, you can have a installer but use the technology of Enphase. So that's when I saw that I didn't look at Enphase as an installing company. I saw it more of like a tech chip company because of their
Yep.
technology.
Yeah. And it doesn't matter if market shifts into leasing or if market shifts into financing. It doesn't matter. Enphase will do well. So yeah, and if people underestimate how hard chip design is and how capital intensive it is to actually do high power chip design. It's very underrated. People do not go and design a chip. Like that's not people's first go-to thing. People go buy microcontrollers and write software and try to manage stuff like that, but nobody's going to go and design a chip, and that's it's a expensive program to do so.
Mm-hmm.
Takes 3 years to get a chip taped out and working.
That'll pivot us to our last topic here. We got a couple of minutes. I wanted to talk. I was talking to you guys off air about this AI earnings fallout. Let me just pull up some links here that we can talk about. I'm going to just pull this up over here. And I really want to get your take on this, Rango, because you know a lot more about this space than I do. So everybody knows, okay, Meta reported their earnings. They did have a beat, what is it, on revenue. So that there's argument to say that that's why the stock went up. But they did report here. Mark Zuckerberg has become more optimistic and ambitious about Meta's ability to win AI, now plans to spend about $40 billion a year, largely on AI investments. Investors were not happy when he was spending $10 billion a year on Reality Labs, and now he's quadrupling that. But he also was really honest with markets, saying he sees 3 ways AI can become a massive business for Meta in the next few years. So he's going to read a little bit about this article. Mark Zuckerberg is now convinced that Meta is a top artificial intelligence company. He made it clear during a Wednesday earnings call with analysts that he intends to invest significantly more over the coming years to build even more advanced models and the largest scale AI services in the world. Heavy spending again. It doesn't come cheap. Meta's increased its guidance on CapEx for this year, saying it's planned to spend $35 billion to $40 billion. Its stock slumped 16% in after-hours trading, but it did... they did actually recover. I'm looking for the exact quote that he had. He's saying, so if the technology and products evolve in the way that we hope, each of those will unlock a massive amount of value for people and business for us over time. I think it makes sense, and we're going to do that. Here's some more. I think, is this the article? Yeah, where is it? Soared better than 9%. Where is the fucking quote? Beyond its advertising revenue, Wall Street is still trying to determine how much longer Meta will need to plow money into AI before it sees some kind of a revenue payoff. So they did beat expectations in Q2, so the stock was fine with that. But typically, when a company tells you that we're going to be spending a boatload amount of cash and it's going to be 3 to 5 years before we see any ROI on that, that's not something that the investors like. So I think I even responded to something for a minute, that what I think Zuckerberg effectively did by being honest with investors about it is sort of cooling the hype around AI that started with Nvidia earnings and people waiting for the money to make its way downstream. And now he's saying, look, cool off, guys. We've got the technology, we got the GPUs. We're still going to have, it's still going to be 3 to 5 years before we really monetize this. And he essentially provided cover for all of the other companies that are in the same situation, you know, the Googles, the Amazon, including Apple, which I want to get your take on. So I see that as a good thing, because they basically provided cover for those companies to say, look, we're in the same boat as Meta. It's not going to be something right away. And I think the market was getting really excited to start seeing, right, the benefit of all this CapEx and seeing the ROI. And I think what he effectively did was he forced Wall Street to think longer term. What was your take on that? And were you surprised that the stock actually went up when he was honest about that, considering that they were losing 10 billion? That was a weight on the stock, and now he's saying they're going to give up 40 billion, and was actually seen as positive.
No, I mean, it's two things. One is they actually gave like how their business model is going to look like with all these investments, and they're not just like giving away all these models for free. And so that was seen as a positive. So basically like business messaging, for example, that's already a thing in India. WhatsApp is already used as a business messaging tool, and WhatsApp and all the Llama models is already integrated in WhatsApp, for example, and that's a pretty big sign, honestly. Now you can ask WhatsApp about your conversations, about your images, about anything you've already done, and just imagine you can become actually a B2B company, right? Like if you have all your business messaging on WhatsApp and you have like a AI model on top of it, now you can ask for like how many of these things people have ordered, and what is the average cost. Like you can think about how the roadmap is going to look like on the application layer, right? And on top of that, they're also saying they're going to like sell access to these models, in the sense that it's not going to be open source forever. If you want to take a Llama for free, you can take Llama for free, so that's fine. But if you want to like just call APIs in your like, you know, cloud service, in your service you're providing, instead of calling OpenAI, I can use Meta's Llama 3 because it's a smaller model, faster model, you know. So he actually gave a good pathway of monetizing these investments. So that was seen as a positive, and not just like throwing away money, as opposed to Reality Labs, where he's saying, I'm going to sell like this VR glasses or whatever it is, and I'm going to justify spending because we are going to be successful doing that. Because market just doesn't believe that, because Facebook does not have a track record of selling consumer products and making money off of it and being successful at it. This market actually believes it, and I actually believe it too, right? And the third thing, they did not just increase capex; they also kept opex flat. What they effectively are doing is hiring lesser amount of people, or not hiring much people, and spending more money to give the existing people more tools to build great stuff. So that's actually really bullish. You're not just like throwing money at people to come and work for you. You're getting rid of all the people who are bad. You're keeping all the people who are good and giving more resources to people who are really good at what they're doing. So that is seen as a positive too. And long term too, the chip cost is not going to stay this high forever. Eventually, the prices of these chips has to come down, and there are a bunch of competition doing that. So you will eventually get capex surprises to the downside eventually, when there is oversupply of all these chips. So that's why I think market liked it. It's not just because they are justifying; they can actually see a pathway to it, to justifying these investments right now.
But typically, like markets, but typically markets can understand that, but they won't necessarily invest. That's like Tesla saying we're going to solve FSD, and markets are like, okay, when you solve FSD, we'll give you the multiple. When the bot is doing bulk in the factory, we'll give you the multiple.
Yeah, but like business messaging is already solved, for example, and on WhatsApp, Llama is already integrated, for example, and they already have 2 billion people using their products, for example, right? So the bulk of the work is already done. Now it's about how are you going to monetize it, right? FSD, I would say, as good as a product it is, it's still like a very small scoped people or an amount of people using it is nowhere compared to 2 billion people using the products.
Right.
So it's a completely different thing. So given that, I think market is not selling the stock off; it's just keeping it flat. So I think that's totally fair, you know. And companies support their decisions too. Like they're buying chips, they kind of have to right now, and they're not spending on random people working on these. They're giving money to people who are good at doing this, and they're giving them and not hiring more people. I actually think that's a smart decision by SOC.
But do you think were you surprised that markets are basically paying for that now, pulling all of that forward, or is that just an extreme confidence that the market has that they're gonna?
Honestly, Meta stock is not expensive, so all these is not even priced into their earnings. So it's like just saying, like Meta stock is actually trading at very reasonable multiples right now compared to what they're growing at. So all these new business lines is technically not even priced in. So and they didn't even say they're going to make their targeting even better with all these AI chips.
Mhm.
Like their ad targeting is going to be better, and their pricing per ad is going to go up. Unless they screw it up in like such a massive scale, I don't think. And all this TikTok stuff, man, like all that is like a pent up revenue.
Mhm.
It's gonna come to Meta. Where else can it go, right? Like if TikTok goes away or TikTok influence is not as big, um, it's in the US at least. It's a lot of upside to Meta, I would say. I'm not invested in the stock. I'm not an investor, just for other reasons. But overall, I would say their execution is solid, their strategy is solid, and they turned it around. I think they'll do well. I don't know about Reality Labs, but their AI investments they're doing and the Llama model they've trained is pretty incredible.
It's interesting. I was actually very surprised. I was
Yeah,
I
they're
thought
doing some
before
good
he was
work.
like, let's just get it over with now. But I'm curious to see what happens with the future companies, that are essentially in the same situation. Like, since you know Apple intimately, how does that affect Apple? Like, what the hell?
I mean, again, I'm still waiting on Apple Intelligence stuff, so I'm not gonna. That product needs to be good. I'm not hearing good things about it, honestly. So I am honestly not too bullish on it, given what I'm hearing in terms of the quality of what they have done. I love Apple. I love Apple products. I use all Apple products, but they need to get this right, man. They need to not just proving the fact that they can do all this stuff. It's like historically speaking, AI has been like AI has been pretty weak spot. Siri has been a pretty weak spot at Apple. They're not done historically well. They need to turn it around in this day and age, you know. So
Apple has been one of the most disappointing companies, I think, of the last 2 years. And I wonder if whether 5
I would
years
agree.
they're still going to be part of the Mac 6, Mac 7, whatever. But in terms of hype, energy, excitement, I just don't think there's anything going on at Apple anymore. I keep feeling like they'll come out with it, it'll be released, but Apple Intelligence wasn't.
It's so slow, and like even Apple Intelligence, I thought they'll release the dev version soon, like pretty much before after WWDC. I thought there'd be some kind of dev version released, and it's almost September, and whatever they've released is underwhelming, and they've not even released the whole thing just yet. So
they're just not in the conversation. Like, I just don't hear them in the conversation. It's Amazon, it's Google, it's Meta, it's.
Well, I mean, for me to add on with the conversation is, I think I mean, if anybody's familiar with the chat with Apple, is their 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 innovation is hardware. It's not really software, you know, and that's what that's what we've talked
Or
about
hardware
before.
software
Is
integration.
they're not really they haven't really innovated anything for a while, right? I mean, that's been reiterated here at the channel for a long time. The way I look at AI is I pretty much pick, or at least trying to see which company will have the biggest data and how to utilize that data appropriately, right? That's why you hear about Palantir, right? I mean, everybody can talk about the software, things like that, but it's how you utilize the data. So
Well, you look at
I mean, valuation is a important aspect to look at also, right? Like for example, I would own Amazon, and I would own like all these like Tesla, Amazon, like these companies. their AI, you can see what they're doing with their AI stuff. They're increasing recommendations. They're making their business more efficient, their returns more efficient, operations more efficient. You can see it. And it's not come up in their balance sheet yet. That's why I would own it right now, because it's just so much upside left in the companies, right? It'll eventually happen, right? You just got to be patient. On the other hand, Palantir, I'm just not right now. Like the the valuation is just like, I mean, they're growing at 22%, man, 23%, maybe 25.
And they are holding.
Um,
They are holding that $24, $23, $27.
Then they are. Then you have the highest peak AI hype cycle right now. You got to grow revenues right now. You got to grow 40, 50%. Maybe they will eventually do it, but like they are accelerating. I'm not saying they are not. But those are all already priced in. Like the acceleration of AI revenues is priced in, right? Like, and they're a great company. I'm just saying the valuation is pricing in a lot of stuff which is going to go right, right? And that's why I have a problem with the AI SaaS stuff. It's exciting, it's great. It's like if you are holding it, take some money out at the top and like, but still hold it. Like don't sell it all it off. But overall, I just think like I just look at the most ideal SaaS company, like most optimized SaaS company, what their valuation is, and what is their revenue, and what are their margins, and what is their growth, and what is company like Palantir or Datadog or whatever, like their revenues and growth and multiples you're paying for right now. And even if you are right, your upside is like, I see a lot more upside in other stuff. Like even Amazon, I see a lot more upside,
Yeah.
like long term. Like I'm not saying more than Palantir, but I see that as a more sure shot, more less riskier bet to make right now. That's all.
I just think the longer Apple waits to really make a play, the bigger and the better that product needs to be. Like the longer they wait to enter, it's like they do with everything. It needs to be an even better product, or it needs to be so much more above and beyond what everybody else is doing to justify it taking so long. I mean, someone here posted, what was it? Apple's the king, and the king usually gets toppled. If you look at what the top 5 companies by market cap were 10 years ago, they're not the same companies, right? You go back another 10 years, they get toppled. And I wonder if whether or not we're starting to see that Apple has peaked as one of those companies. It's not to say that they won't be, a great company moving forward, but are they going to be part of the conversation moving forward with where the tech industry seems to be going? I just don't know anymore. Disappointed.
I mean,
and with Apple,
they make great products. Yeah.
I was just gonna say that with Apple, I think the right now for me the bullish case is just they're always gonna have a following, right? They're always gonna have a following. There's always gonna be people that are going to buy their products regardless, right? Like nobody's gonna take the time to do the research, or they're just gonna see which one has what's the next iPhone, what are the updates, things like that, and they'll always buy it, right? Blindly sometimes. I mean, if you really think about it, I would bet the majority of the people that buy Apple products, they just buy it blindly just because they're very they're very connected to the to the product.
But then you get into the territory: are they a growth stock or are they a value stock? If they're just a value stock,
they'll be a market performer, and especially at this valuation, and I don't see much growth coming out of them anytime soon. So I think they'll be a market performer in the sense that they'll just keep going up with the market, like some upswings, some downswings. But overall, I think they'll just keep going up with the market given their indexization, right? People putting money in S&P. Apple is a big part of S&P already, so they'll keep going money in Apple too. So I think that's how. I don't know if they'll outperform in the long term. I mean, Buffett selling 50%. That's a huge tell.
That
is like even for. I mean, even for him, he can't fathom the valuation right now. He is the ultimate. He gets so much dividend out of Apple, and
right?
It's like, for him to sell like 50% of his position, that's a big deal.
Well, I think,
and I am so surprised that the stock, like during all this selling, the stock has not fallen from 220s and 230s. And he's able to exit liquidity, all this shit, man. He sold so much. He sold like 6% of the company or something, and the stock didn't go down. I mean, that's crazy.
Well, didn't he sell a while back? Wasn't it that
only
he
a small percent? Though. It was only a small percent, not the 50% though.
Right.
He did not finish selling. He did not finish selling it, or he's just filed for selling it right now. I thought he finished selling
Someone
it
in the chat
already.
was saying he had sold a while ago, but we're just
He just filed it He just filed it yesterday. Yeah.
it's
Yeah, exactly. Like he
bucket.
just filed it yesterday. Like he's been selling it all the last few quarters.
That was me. I'm thinking he's either just taking profit or he's losing confidence that they have room to run, or he sees opportunities somewhere else.
I mean,
Well, I'm pretty sure by now he's playing with house money with Apple.
Totally.
Even if he
Oh,
sold
yeah. No.
he's just playing house money right now.
So like Chamath had actually like a pretty good graph. Like the number of times he's mentioned Apple in his annual shareholder meeting has actually gone down over the years, and he was slowly selling, and all at once when the AI rally popped up, I think he saw that as an opportunity to just sell a whole ton of shit. You know? Yeah. He used all Wall Street as exit liquidity, I guess.
I want to say thank you, 150 people hanging out for 70 minutes. Thank you guys for being here for being here. Thank you, Rango. Thank Heinze. Thanks everybody for being here in the chat. I want to give the results of the poll. I did a poll here. How many basis cuts? If you guys haven't voted, you want to vote. How many basis points would the cut in September be? 25, 50, or 100? 61% are saying
it's going to be
50, or
it's going to be 50.
It's going to have to be
it's
going to have to be 0.5, especially if we collectively agree that the Fed cut rates too late.
Actually, yeah. Okay. I think I'm gonna go a step further. I'm gonna say it's gonna be 100 basis points total, like by September. You know why? Because Fed projected unemployment to be 4.3% at the end of next year, and we are already there. So I think that will tell them that we got to cut like 100 basis points. So they said we were going to have unemployment 4.3% at the end of next year. So that's crazy, right? Like, and also I do want to like leave the show with this. I think the next my next big AI whatever play is AI inference. So AI inference is going to be much bigger than AI training. And I did a private investment recently in AI inference company. And it's going to be
good. You got it good. He's pumping his back. Watch, Rango's pumping his back. So when it IPO, he's not pumping shit on all of us.
No, I say AI. So generally, so if you train a really good model, and if the model has to go everywhere, like, and it needs to be useful, right? And AI inference has got to be like 10 times bigger than training, the money itself. 40% of NVIDIA's earnings is coming from inference, and NVIDIA's inference solution is not as good as their training solution, just because of the constraints they have. And so that's the play here. So I'm thinking of all the investments in that realm in the next few years.
Right. Okay. We'll leave it at that. Any parting words, Heinze? This is your first time on a live stream. You would say you were a little nervous, wasn't it? Just like chilling, hanging out with the boys.
Oh yeah. And again, to the chat, thank you guys for for listening in. I put on the chat there that there's a lot of value, at least for me personally, being part of this community. What a lot of people don't realize is, being part of the finance, just whether you follow different channels. I mean, we're a very small community in terms of how many people in general follow stock market trends. I think it's like 6%. So all of this stuff, it has brought value to me. But thank you guys. Thank you guys.
It's hard to find those people that just want to talk about this shit all day. Like, my wife doesn't want to hear about Bitcoin anymore. She doesn't give a shit about Tesla. She was just like, you want to talk to people about it. So yeah, I appreciate this too. Thank you guys for sticking around in the chat. Thank you, Shane, for coming on board and helping out with the back end. He kind of helped me get moving along here. And
thank you, Carlos, for inviting us, man.
Oh, we'll do this again, man. My pleasure. It was good. I had a good time chatting with you in Vegas. So and Rango, it's always a pleasure. So we'll do this again. Maybe we'll get
Rango. I wish you could have gone to Vegas, man. That was
Rango. Do some little inside.
I would like, I was going through so much shit during that time, man. I would have loved to come. If next time you guys are doing this, I'm definitely going to
We're
come.
talking about
I was just
we just gotta find-
battling, like, yeah.
you know, it's like when we started the whole thing, it just everybody was in a different place, and now we're all in a really different place. So it's getting harder, right? As people get older, responsibilities, but we'll do what we can. You know? On that note, I'm gonna just say it again. If you guys haven't, please hit hit the subscribe button, and you know, consider becoming a member. Consider joining the Patreon. I guess I should put the Patreon in the link in the chat. I'll put that there for you guys if you want. And if you
Finally, we should catch
follow
up,
us
man.
on
Yeah.
Oh, dude,
Twitter,
anytime, man. Anytime.
and so in terms of for the next episode, there's a possibility that I'm going to be like, I got a job that I can't say no to. It's like an offer I can't refuse. So I might actually be doing this next episode on a Saturday afternoonish between two projects. So if you want to know when the next episode is going to be, follow on Twitter. That's what I'm going to be. I'll post all the information there. We'll get a group together and we'll have a chat. Thank you guys so much. Good luck on this coming week. Hopefully we'll make it through. All right.
Good night, man.
All right. Thank you guys. Have a good one. I'll see you later.
Later, guys.
All right. And